Hi there, everybody. Mike Petras here again, your Star Realtor of Star and the Treasure Valley, back with another educational video to where we're going to go ahead and tackle forbearance. We'll talk about that right after this. Welcome back after the break. Again, Mike Petras here, your Star Realtor of Star and the Treasure Valley. Here we're going to go ahead and address today forbearance and the big elephant in the room that people think is going to happen with forbearance and as it could possibly relate to the crash. So we'll go into a big PowerPoint presentation as I usually do, and we'll go ahead and break down some articles and what's really kind of happening in the market. And will forbearance be that issue that could possibly crash the market, bring it down to a level that buyers have been waiting so patiently for over several years now. So before we get into the PowerPoint presentation though, please feel free to click that subscribe button below. That will keep you in tune of all my videos that pop up, everything from the market updates to traveling the Treasure Valley and educational videos like this. Also hit the notification bell too as well, so when they do pop up, you'll be able to see them. So let's go ahead, let's dive into the PowerPoint presentation, talk about it. And if you have any questions after this video, please feel free to give me a call, 208-715-7827. So let's go ahead and let's dive into it right now. All right, everybody, let's go ahead and let's dive into the PowerPoint presentation portion of this video. Now, I went ahead and wedged myself really in the corner here because, I mean, there's lots of great information that I'll be bringing up as we do discuss this. And again, as I mentioned in the last segment, I am not a mortgage professional. I am a real estate agent. So if you do have any questions regarding forbearance, perhaps you're still in it, and since the timeline has now passed, you may want to discuss these options with your mortgage professional so that you do know the proper steps in order basically to stay out of any foreclosure proceeding. But as we get along in this video too, I'll tell you about some new rules that popped up as well. That's going to go ahead and bleed into 2022. That will also help you prevent against, potential foreclosure that can pop up. But as we bring this up, it's also going to roll into the state of how this market really is forbearance really going to come in and crash this market? So let's just go ahead and let's dive in here real quick and just briefly review what mortgage forbearance is. Again, talk to your loan professional. He'll really be able to break it down, but it basically was just an option where mortgage lenders could provide for borrowers facing temporary financial hardships. And of course, we know that the COVID-19 pandemic took a lot of people out of work, okay, and made it difficult to make those payments. And it gave that option to be able to more or less relax to a say from being able to be foreclosed on during the hardship that they just couldn't handle at that point. So when the borrower's circumstances threaten to lead to misuse or to missed mortgage payments, it can help prevent foreclosure. And in this case, for all that time it did. Even when the CDC kind of came in and said, well, hey, we're going to, extend this thing. That's up to you how you wanted to take that one, but it did move forward and that was the way it is. But now as of September, it's really all over when it comes to the forbearance. And a lot of people have a lot of questions. So of course, it's just a short-term reduction, suspension of payments in response to a borrower's temporary hardship, as we mentioned, but it can also have significant impacts. Now the credit scores we'll get into in a second, but the one that I want to focus on is the credit history. Okay, because regardless of whether or not this was supposed to affect your credit score, you can guarantee that the big three out there was also making a history on you. Okay, so you do have to keep that in mind, and that's something that they will review. But according to the law, according to LexingtonLaw.com, no missed payments will be recorded and your score will be unaffected by your choice to participate in a forbearance. So under the rules of the CARES Act that came through, it was not allowed to show up on your credit report. But credit history, that's another deal. If you've ever been, say, in a credit card forbearance or any other kind of forbearance, it will technically show up in your credit history. So your mortgage, I'm sure, is going to be there too as well. And when you go to apply for, say, a loan modification to get out of forbearance, it will probably be something that they will review, and it could potentially make a hiccup. Again, that's something I would go ahead and bring up to your mortgage professional and ask, say, hey, does my credit history really come into the fact to be able to credit or to be able to affect it, like, say, a credit score was? But as we all know, the COVID-19 pandemic did not allow that to be hit on your credit score. So let's go ahead and let's talk about what is happening with forbearance. So when this initially came out, of course, the numbers were much higher across the nation of all the people that were in forbearance at the time. But as of June 2021, I mean, those numbers have gone down. People have gotten back on track. It said, according to MBA here, it said forbearance decreased by 2 basis points from 3.93 of servicers portfolio volume in the prior week to 3.91 as of June 2021. So technically 2 million homeowners, according to them, were in forbearance plans, which makes up about 1.43% of the total homes in America. But as you kind of read through this article, and go ahead and click, or just feel free to research the link up at the top. I don't know if I'm blocking it. If I do, I'm so sorry. I apologize about that. But go ahead and click on that and you can kind of read through. But the amount of forbearance people are getting out of it, they're getting their payments back on track, which is returning a normalcy back to the market. Now, of course, say we had a high percentage and forbearance was not allowed. Yeah, but say it wasn't, well, then foreclosures could have possibly tilted this market, back to potentially a 2008 crash. But in this case, really, it's kind of not that deal. People are getting out of it. I mean, they said right there, the share loans in forbearance declined for the 17th straight week, with small declines across every loan category. So again, just continually going down, people getting back on track, and forbearance really not being the issue that they really were talking about when the COVID-19 pandemic initially hit. Moving on, if you are in forbearance, some things you definitely, like we talked about before when it comes to your credit score, is, again, the CARES Act rule states that mortgages in forbearance should not be reported as having late or missed payments, and the forbearance plan should not harm your credit score. But remember, guys, and what it's saying right here too as well, is that, remember, lenders and servicers have never had to deal with this, with mortgage forbearances on this scale since the COVID-19 pandemic. So it's up to the borrower, it's up to you to be extra vigilant and make sure that nothing slipped through the cracks on your credit report. And if it did, that's definitely something that you're going to want to address. Get out there and talk to your mortgage professional about, so that you can make sure that your credit score really wasn't taking a hit in the end. Okay, so now that it's all said and done, and we're starting to go through correcting what was going on with the 2 million plus homes that were in forbearance that are now decreasing, there's different ways that this can happen for people to get back on track. One, of course, is just obvious: a full repayment, the one lump sum, all the interest accrued, all the monthly payments just paid off in one shot to get you back on track. Making intermittent payments was another thing too, meaning that you could repay the missed amount over 3 to 12 months on top of your regular monthly mortgage payments. Lengthen your loan term. The amount that you missed at the end, you extend the amount that you missed towards the end of your loan term, along with payment deferral, same thing, and the loan modification also helping to do that as well, which, for the loan modification, is going to be probably the most popular thing that people will do. They'll go in, they'll make a loan mod, they'll try and take those payments towards the end of their loan so that they can pay it off when they actually sell in one lump sum. But again, it helps the borrowers who are at risk of default change their mortgage terms, including a lower interest rate, which interest rates have actually been on the rise. We'll get to that in another video. Reduce the length of the loan, or even reduce the monthly payment. So loan modifications is probably going to be the majority of what you see people with forbearance coming out of. So there's a lot of people, we know that the credit score, according to the CARES Act, cannot be affected, but the credit history can also be reported. Again, that's something that you're going to want to follow up on. You're going to want to see whether or not your credit history was really reflecting and how bad it was reflecting your missed mortgage payments, because that could very well make a determination if you're going in for a loan modification. Again, I'm not a mortgage professional, but I would recommend that you reach out to your mortgage lender to be able to discuss that and how it could possibly hurt you if you're going to make that loan modification itself. All right, moving on. Basically, for all the different types of loans that we have, like say we're talking about Fannie Mae and Freddie Mac loans, you can do the repayment plan. Your missed payments over time through higher monthly mortgage payments. So you can kind of tack that on to your mortgage payments to be able to make up the difference and pay it off. You can also resume your regularly monthly mortgage payments and put the missed payments either at the end of the loan or when you refinance or sell your home. So again, that would require a loan modification to go ahead and do that. But again, the long term, you could save on your interest rates if you're going to do the loan mod, and you can place them towards the end. And again, your credit history, is that going to come into play? FHA HUD loans, the money owed into a subordinate, no interest liens that come payable if you refinance or mortgage or sell your home. They can also extend their mortgage term to 360 months, which will reduce the monthly principal payment and interest payments too as well. And again, you could have the loan modification, which is going to do all this. And they even say for pretty much all these, except for Fannie Mae and Freddie Mac, that you can negotiate up to 25% off monthly mortgage payments. Again, reach out, talk to your mortgage lending professional about that in particular and how that works. USDA loans, if you find yourself in one of those, the missed payments, it can be deferred to the end of the loan, which would extend the term of your mortgage. So basically, balloon payment in that towards the end, and it's just going to extend the term to where you pay it off. So USDA loans, contact your mortgage professional. VA loans, awesome. Borrowers can defer what they owe to the end of the loan without owing additional interest. Super awesome. If you've served in the military, you're under a VA loan, more power to you. To reduce the lump sum payment at the end, borrowers can pay the amount off over time. So really cool things that you can do when you do go for the loan mod, when you do go to make adjustments to what you did owe in the forbearance over it. So now say, for example, you weren't able to do a loan modification, for any such reason. Say your particular financial institution kept reporting to the credit bureau. Okay, it came into effect. Again, remember the CARES Act didn't allow that to happen, but it slipped through the cracks like we're talking about. Okay, and they try and get you into foreclosure. Okay, or say, for example, the credit history comes up and becomes an issue. Again, talk to your mortgage professional about that. But in order to prevent and avoid foreclosure, the Consumer Financial Protection Bureau put a recent rule in place to be able to make sure they're just not coming in, trying to slap a foreclosure on you and get you out. So first off, some of the rules that have to happen before they start a foreclosure proceeding on you because of your forbearance is, number one, the loan servicer must review a loss mitigation application submitted by the borrower that shows the borrower's financials and household information. So they're going to have to get that, and you have to submit that over to them. Okay. Loan servicers must also follow state and local laws to verify that the home has been abandoned before proceedings with a foreclosure. So definitely check your state and local laws and how that applies. Okay. And then third, the loan servicers must make a diligent effort. Diligent effort is what I really want to stress here, to contact the homeowner. So it's not like they're just going to say, okay, well, I'm just going to keep off the phone, see what happens here. No, they have to go out there. They have to contact you. They have to say, okay, well, we're going to get ready to foreclose on you here. And you have to be unreachable for more than 90 days. So if you're coming out of forbearance, you're looking how to get out of it, and they're trying to call you, make sure that you pick up the phone and talk with them. Okay. Because if you stay out of contact with them, then they can basically move forward with your foreclosure process. And you really don't want that, because in the end, the foreclosure is going to hurt your credit score the most, and it's going to be the most difficult thing on your credit report too as well. Because remember, a foreclosure is going to last on your credit report for 7 years. and nobody wants that. So now the new rule went into effect. It did go into effect back into from August 31st, and it will go all the way here to January 1st, 2020. So if you are coming out of forbearance, again, here are the rules for you. You can go look them up for yourself on Forbes.com at the link above. I do recommend you go ahead and type that in and get all the information necessary so that you know what the Consumer Financial Protection Bureau has in place. So now, as we kind of talk about this, a lot of questions kind of pop up. Well, has inventory increased due to the forbearances? Is this going to affect the market? Is this going to crash the market or tank the market? Is our market going to become completely overfluxed with properties to where it's going to make a significant change in market values as we go along in the future? So let's talk about, those that, are thinking about selling their homes to be able to make back their forbearance payments and maybe start looking into another home, because that has happened. Due to the equity gain that literally we have seen across the United States, and especially here in Idaho, that's a very lucrative thing right now. You could turn around, and this is why maybe forbearance won't be an issue as hard as we think, is because of the equity gains, is that you can turn around, sell your house, get out of the forbearance that you own, and go right around, turn it into another home at a lower interest rate that you possibly had before, which works out for your benefit. Okay, but are you deciding maybe should I sell my home to be able to go ahead and pay off my forbearance and do all this? Well, if their income takes a permanent hit, so say your income did take a permanent hit because of the COVID-19 pandemic, you lost your job, you weren't able to get it back, the job that you got is just not kind of fitting the bills, and you really just kind of took that permanent hit, and it's difficult making the monthly mortgage payments. Selling your home could be a very good way to reduce the costs. Now, again, rental markets have gone up too as well. So what kind of a significant savings really what kind of a significant savings do you think that you might have if you do decide to sell your house? That's something that you'll actually have to look into the rental market, or if you go to buy another home, as compared to the equity gain that you made when you went ahead and sold your home. But as I mentioned, home equity is soaring, which is particularly helpful for homeowners in forbearance considering selling at a higher price than purchased. So you'll be taking that money, paying off your forbearance of what you owed the last mortgage, and then being able to kind of roll that into a new home, possibly at a lower interest rate. So it could be advantageous to go ahead and just sell your home as, say, trying to do a loan modification or paying off things in one lump sum. Again, that's something that you'll have to kind of kick back, talk with your mortgage professional about, and then on top of that, look at your financials and see what's going to go ahead and work better for you. But a lot of people right now coming out of forbearance, that if they're deciding to sell their house, they seem to be kind of doing okay on the back end after it's all said and done. And it becomes that option that if really kind of things hit the fan because of the forbearance, because of your equity gain, if you make you pay off everything, you pay off your forbearance, it's not going to be that factor that is going to tank the market. Again, so if you're sitting there, you're waiting for property values to crash because of forbearance, because of the equity that people gained out of their period of time that they've been out of their house, it's really the one factor that's really kind of saving people and saving this market from really crashing due to the forbearance rates. They say the wealth accumulated in homes also offered a safety cushion for homeowners who have gone through forbearance and still need financial assistance upon exit, by allowing them to sell their home, repay the loan, and avoid foreclosure too, and a big scar on the credit report. That's another thing. If you're going into foreclosure, again, big scar that you'll be looking on for the next 7 years on your credit score, which could be upwards of 100 points. That's a very, very significant deal. Okay. So again, if it wasn't really for the equity gain that we've had on just astronomical levels, especially, here in say Ada and Canyon counties, especially Ada, where we went up 23.7% last year in equity gain, it just gives that safety cushion for the homeowners that did go into forbearance. So should you sell your home? Run your financials. and kind of see whether or not that might make sense to go ahead and make all your payments, pay off your forbearance, do all that, roll it into another house, maybe even that lower interest payments as you're going along. And if you are deciding to sell, of course, please feel free to give me a call. You can reach me at 208-715-STAR. That's 208-715-7827. And we can go ahead and discuss those strategies too as well. And I could also put you in contact with great mortgage professionals too as well that can guide you through the whole forbearance issue. Well, you really should be talking to your current institution, but maybe kind of give you that guidance to be able to roll into a new home too as well, and be able to kind of move forward from all of this. Okay, so now, how is forbearance exits really going to impact the housing supply? Okay, well, according to Zillow, they're saying that that our market's going to get about a 15% boost, and that roughly 25% of the borrowers who exit forbearance over the past year have listed their homes for sale afterwards. Well, you know, being a realtor, I take anything that Zillow tells me with a grain of salt. Okay, but I mean, our inventories have gone up. That is definitely the truth in the case, especially here in Ada and Canyon counties, and basically kind of across the US too as well. But our demand is still there. So people that are coming out of forbearance and they say want to go buy another house, well, they're soaking up another house and taking that off the market. And if you watch my monthly market updates that I come out with every single month, you'll kind of see that trend. The demand is still here to be able to soak up inventory that's coming back onto the market. Now, you know, sellers, again, the more inventory that does come on the market, and the more that gap spreads, the harder it's going to be to sell your home. As interest rates go up too as well, it could chase out the buyer pool. There's a lot of different factors. But what they were saying here is with inventory at all record lows and construction falling 7% in July, many folks were hopeful that the slew of forbearance exits would boost the housing supply if the homeowners chose to sell. Now, a lot of them, and I said this early in the video, are choosing to do loan modifications from what the trend feels like right now. So how many are really turning around and selling their houses? And they say as a result of all these efforts, there's likely to be minimal addition to the housing stock. So again, the demand levels are still here. People making that lateral from getting out of forbearance and buying a new house, or just people trying to move out of state, move here to Idaho, or whatever the factors may be, the demand is still there. So they say, but even if more inventory enters this market, it won't be enough to put a significant dent in high-priced home, says Lawrence Yun, a chief economist of the National Association of Realtors. The National Association of Realtors really tracks everything that is happening in our market. They say basically prices might slow down a bit with new homes entering into the market, but they won't roll back. And you can kind of see that a little bit too with our recent plateau that we've seen here in Ada and Canyon counties. It has really kind of flatlined in terms of the prices, went down maybe just a little bit, but as we can kind of see now, we're going to start probably inching up at that 3 to 7%, and it's just going to kind of continue to creep. So buyers, if you were waiting, you know, for forbearance, for example, and forbearance really being one of the only things, okay, that really could have affected this market, forbearance is not looking like the thing that is going to reduce and drastically drop this market and get you cheaper home prices. So keep in mind that we're probably still going to be going up here. So buyers, interest rates are still low. This market, the competition is basically kind of faded away. The contingency restriction, or not restrictions, but the contingencies that sellers were able to get away with, like appraisal waivers, inspection waivers, those are all coming back. So buyers, interest rates are low, more inventories on there. The fight is not there like it used to be. So if you are on the fence of buying, again, forbearance is not going to, it is not looking like that crux that's absolutely going to crash this market. And it's just not going to return back to that level. So if you have the means, jump back in while you can. But again, professionals here, they're saying, I don't see a price decline, rather a moderating growth to home prices. So again, breaking back down to that 3 to 7% that we're kind of predicting that's going to happen here, especially in Ada and Canyon counties over the years to come. So again, what am I just trying to summarize and have you take out all of this is that a lot of people were asking me, Mike, well, what's forbearance going to do? What's forbearance going to do? What's forbearance going to do? Is forbearance going to crash the market? And really, if you take a look at the whole financial institutions as we stand right now, forbearance was one of the biggest things and the biggest question marks that people have with the financial institutions. Anything else that has popped up recently, the financial institutions have figured out and basically said, okay, well, we got it taken care of. Do the banks want to see themselves another 2008 crash to where if they have to deal with all the REOs or the foreclosed properties? For them, that was a difficult thing until a lot of the hedge funds came up and bought up the properties and kind of alleviated that stress, plus the bailouts. And at this point, another thing to think about is, does the government have the means for the bailouts if it were to happen again? My prediction with the inflation, that way things have gone, I don't think the government could even touch this one. So it's really up to the financial institutions to really kind of play ball and make sure that the forbearance issue doesn't become such an ingrained thing to where we're going to see a complete market crash. And you can tell by the rules in place right now, by like the credit bureaus and the protection from your score, even though maybe credit history is another situation, and the declining numbers in the forbearance, people getting back on track, forbearance just doesn't seem to be that issue in the cards that's going to make a significant drop if you are sitting and patiently waiting for this market to bottom out so you can go ahead and buy a home again. So again, buyers, if you're in this market, considering some more inventory that's on there, considering interest rates are still low, but they are on the rise. So keep a watch on that, because every percent that the Fed goes up is going to charge you another 10%. So you got that to contend with. And right now, a lot of the competition that you were seeing 6 to 12 months ago is gone in Ada and Canyon counties. I mean, it's still there to a degree, but it's not the fever pitch fight that we had back then. Sellers, especially if you are in forbearance and you think that this would be a way, again, review your financials, make sure it makes sense to you before you call a real estate professional like me, or you talk to your mortgage professional again about maybe other ways of keeping your home and effectively being able to alleviate the forbearance issue. But again, look at your credit scores. Okay, make sure nothing slipped through the cracks. Also look at your credit history, talk to your mortgage professionals about how credit history could possibly affect you trying to refinance or do a loan modification to get out of your current forbearance situation. Well, thank you, everybody. I really appreciate you taking the time again out of your day to watch this video. Of course, hit that subscribe button below because that way you'll be in tune with all my educational videos, my monthly market updates, traveling the Treasure Valley, showing you what's fun around here, talking to different local business owners, and letting you know what are some really cool spots too as well. Hit the notification bell too, so when these do pop up, you will know, and view my videos down the line. Of course, if you have any questions too as well, you could always reach out to me at 208-715-STAR. Again, that's 208-715-7827. Also, feel free to click the link in the description below for a relocation guide. If you are thinking of moving to the state of Idaho, come on in, give me a call. We could talk about that and talk about your reasons why you want to come out from another state as well. And really, the relocation guide goes through everything that you're going to want to know about everything that's happening here in the Treasure Valley, all the way from employment to medical to the cities that you might want to move to, and so much more. So go ahead and click that, and I look forward to hearing from you. I look forward to fielding your questions, and I do also look forward to the time that we do speak in the future. Until then, God bless. Until the next time we speak. Thank you so much. Bye-bye.